Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Monday, new week. Got a few interesting things happening. Of course, we're having the big jobs number on Friday, which I don't know. That way we should talk about that, I guess. But I don't know if there's too much. Oh, actually, we have retail sales today. Do we? No. That's next week. That's next week. Tuesday, we're going to come through in here and look at what we got. Jolts, CPI on Wednesday, PPI on Thursday, consumer sentiment on Friday. This is not... There we go. Well, let's go and take the charts and look at where we've moved over the weekend. So on Friday... the market kind of interpreted that news is pretty good. So the treasuries did sell off. S&P 500, well, it was kind of a little bit mixed. Like on the initial news throughout the session, they sold and then came back up. This morning, we're seeing some more negative sentiment in the S&P 500, and the treasuries are, in response, moving up. Although we've got quite a ways to go before we are to like the highs and have the possibility of crazy stuff happening again. Oil, a little bit of movement in the oil market, but nothing too crazy. Just up a little bit. Various geopolitical headlines. Gold holding the range. Silver as well. Copper coming back just a little bit. Japanese yen been looking really good. This Japanese yen has kind of been the outperforming currency as of late, and the dollar has just been savaged the past week. I tell you what, this turn was so fast. Like I think it's really taking a lot of portfolio managers and so forth by surprise. And then Bitcoin, Donald Trump had his crypto summit on Friday, and then we're back down, and basically. This whole, well, I wish it could go further back. I have to go further back. Kind of this whole run that we've had since basically the election, basically from election day, I think is likely to come back out. Because, like, that was... The crypto summit, I don't know. They were expecting the government to like buy Bitcoin or something, and that's definitely not happening. And so now that all of those events are kind of past, it is kind of a sell the news kind of thing. And so that's where they're at over there in cryptocurrency world. So I do see a fair amount of volume trading over here in the treasuries, but nothing too crazy. So I'm going to turn on the algorithm and we'll see where it goes. We'll switch over to here. Let me hop through. Yeah, it's kind of weird. I think it's weird when like you have notifications in certain applications that you've already seen. Like they didn't mark the notification as read for some reason. That's really annoying. Oh, make sure that we have the news squawk on. We have anything else? Oh, we have a 3 and 6 month bill auctions today. New York Fed inflation expectations at 10 o'clock. So it's normal to see a large bid or offer near the higher low or wherever last pivot was, things like that. I feel like that one at 07 is maybe a little, kind of sticks out a little bit more than usual. That one at 08. So it kind of looks to me like the liquidity is possibly positioned for a long. You be careful when you're saying like, oh, are they going to move towards the liquidity? Because there are regimes where they move towards it and regimes where they move away. But given that the overnight action was pretty tilted to the upside, I think that that's probably what's going on there. So I don't know if that helps us or if we should be discounting that. But it is there. Oh, look out. Elon Musk is on the Twitters. This is from Mohammed El Arian. The central bank needs to be open to reconsidering what's appropriate. In a world where adverse supply shocks are more common, the Fed's fixation on a 2% inflation target is risky. And that's Bloomberg. I'm not going to read it. I'm not going to sign in with my email and use my free article viewing for that. I think I get the gist of it. He wants us to be able to move to a 3%. Is what that is, right? It's kind of funny, like the time when it would be appropriate to do something like that to increase the inflation target is like also the time when you shouldn't be doing it, right? Like the time that you could do it and get away with it would be a time when nobody would care. So I do kind of think that means that the inflation target will always be 2%. I don't know if you can really change it. I suppose if we had really gotten a lot of inflation, I suppose now maybe you could. I suppose now maybe you could get away with it. No, not now. I think the window is past. It'd need to be a time when like inflation is really, or maybe when you're starting to see deflation, yeah. Secretary of State Marco Rubio announces 83% of U.S. aid programs were canceled. Well, treasuries coming down to the bottom of the range here. I am detecting a possible pivot in the S&P 500, but I have a hard time believing that the treasuries would move that much just on a pivot. There is a little bit of volume on it, but we've only got 2 bars, so it's a little bit too early to be calling it a meta order. Does seem to me like you've got a decent amount of activity going on here for a Monday, huh? Might just be a quiet day today, though. Like news-wise, well, I guess I should try and keep us locked in here on the treasuries. Be careful, because when I start yapping, it makes me want to take trades, and I don't know if it's appropriate for me to take a trade in this. There does seem to be something going on. Morning, Amir. I didn't say good morning to Uzi, but good morning. Yes, it was daylight savings time here in the US. So that is also something that tends to kind of throw the markets off a little bit for the few weeks in which it's different between the US and the UK. From r/day trading, if statistically majority of traders ultimately lose money, why is trading so popular and why do so many people do it? Well, so first of all, I don't think that trading actually is that popular. It was for a short time during the pandemic, but overall, the niche of day trading is actually quite small. It's just that even our quite small niche is really big. You know, there's lots of people and lots of money involved. So for those of us that are in there, why do we pursue it? Well, I think part of it is that we are socially conditioned by society to think that it's a prestigious thing and that we can make it and do it. And second of all, markets are really good at fooling us. So everybody seems to think that they have an edge when they really don't. Yeah, it seems like that there aren't barriers to entry when really there are big ones. Same reasons people keep going to the casino. Yeah. Bunch of people trying to hand wave away this statistic. So you just noticed there was an odd tick up in the ZN and the other two instruments didn't really follow it. How do people manage their financial situation when they lose their jobs? I'm just wondering, how do people manage their finances when they lose their job, especially when you have bills to pay like rent, bills, basic household necessities, and all? How do you manage everything? What if a person can't be eligible for unemployment benefits and can't get a job right away? How can they survive or manage? Yet they're screwed right now. They deplete whatever savings they have and rely on family and friends for financial assistance. My brother has been out of work for 2 years and is going through bankruptcy after borrowing $40K from me and another $100K from our mother. Wow. $140K over 2 years? Really fun finding out that personal interest-free loans also get discharged through bankruptcy. Not that I was holding out hope for him to repay anytime soon, but it was irritating to find out that I wouldn't have any legal recourse for repayment if he ever does turn his life around. A loan for what? That's okay. Sounds like a crazy. I think this is how most OnlyFans will start. Yeah, okay. Yeah, I think most of the tech workers that have been laid off in the past 2 years got severance packages. Zelensky will be back looking for peace, but that happened. Bullwinkle, I was right. He signed the deal. Do you not pay attention? Let's see here. Am I remembering that incorrectly? He did go and sign it, I thought. Let's see. I thought that they were kind of saying that it was, but maybe it wasn't actually. Let's see here. Oh, they haven't signed it yet. They're still talking about it. Trump has made it clear to his aides that he will not resume providing military aid and intelligence to Ukraine, even if Kiev and Washington sign a minerals deal, NBC News reported, citing unnamed Trump administration official and another administration. But they were, I thought that they were close. There was definitely some headlines last week kind of suggesting that they were. But I think that they were maybe just saying that for his address thing, right? Yeah, that's right. U.S. says Zelensky. No, that was 4 days ago. Yeah, I remember that. The headline was like Zelensky basically talking like he was ready to sign a mineral deal and everything. But I guess it hasn't actually been signed yet. But I still think that I was generally correct about that. Maybe we'll have to wait a little bit of time for them to actually do the signing. Zelensky said on Tuesday. No, that was a long time. That was last week. Let's see here. Donald Trump says he believes Ukraine will sign rare minerals deal. And I think there's more. Let's see here. The Daily Mail. Donald Trump is pressuring Vladimir Zelensky into accepting a raft of new terms if the Ukrainian president wants to end the bloody and protracted conflict with Russia, while admitting the country may not survive anyways. The ambitious new terms will be combined with a proposed mineral deal that blew up during tense negotiations that culminated in a public Oval Office spat. Trump has now upped the ante on his original requests, insider claims, demanding Zelensky call an election and potentially step down as leader in order to secure military aid and intelligence access from the U.S. Oh, they're trying to push him out. Trump is also expecting Zelensky to be open to relinquishing territory to Russia in the name of striking a peace deal. We want to do anything we can to get Ukraine to be serious about getting something done. Wow. Trump lying about it as usual. Well, it was very much the case, though, that Zelensky kind of, what would we say, backtracked on it later in the week, that basically saying, we do want to sign a deal, not like doing like getting on his knees and apologizing in public per se, but kind of giving an apology. So I do think that we saw what I was expecting to see. But they haven't quite signed it yet within that 1 week. Okay. Let's give it another week or two. I don't know, man. With what's going on in Kursk, I don't know if kind of feels like it's too late already. But what do I know? No, you know what? I kind of you're doing this thing that I see liberals do a lot that really drives me crazy, which is like we'll say something and then things turn out a certain way and we were correct on the merits of it. Like generally speaking, things did go the way that we said that they were going to, but maybe on small details it's not, like it didn't happen in the time frame or something like that. And then you're like, yeah, see, you guys were wrong. But it's not like you guys were right. It's just like, a teeny tiny little detail that you can grab onto. So this is a confirmation bias problem, right? Nah, I'm still calling that one a win. Now on that thing, I do kind of wonder. I'm seeing a lot of stuff on kind of the more right-wing news sources about the Ukrainian forces basically being encircled in Kursk and all of this sort of thing. But I'm kind of wondering if that's actually as big of a deal as they're making it out to be. Like, they're making it out like, oh, if things go bad in Kursk, like, that's the end of it for Ukraine. But, like, Kursk is a place in Russia that they had pushed into that I wouldn't have expected them to hold forever. So I don't know if that's, like, the end of the war for Ukraine or anything like that, Move lower here, but not really a change in cumulative delta. maybe a move in the Japanese yen, but not. That was a little bit of an odd move, to be honest with you. Kind of driven more by the front end of the curve, too. We could be seeing a spread trade coming through. Hell, but I'm not seeing like outright buying in the 30 and the 10. Just selling in the 5. So we can be careful because maybe the buying will come through on the other leg. That's probably what we got to be careful about there, right? And getting a little bit of pushback even. Let's recenter it right there because they do seem to be in line. The man wrote art of the deal, so kind of an expert. Well, but the issue is the kind of deal making that Donald Trump did in business really appropriate for geopolitics? I think that's kind of still an open question, you know, because I think that the way that Donald Trump operates is really high risk. And in business that works because, you know, you only have to make it one time. Like Donald Trump is really, frankly, a perfect example. How many of his business ventures have failed and like failed hard, right? But then he had one that basically The Apprentice. I think it was The Apprentice that really made him truly, truly rich. But, you know, it only takes a few of those to be successful and you know, you've got the money. But in geopolitics, you're wrong. That is maybe the end of you, you know? So I think it remains to be seen if Donald Trump's high risk strategies really pay out in the long term. You know? You know, we could have a situation where the United States completely abandons Ukraine, and maybe even despite Europe's best efforts. It does seem to me like Europe is stepping up a bit more. It's kind of funny because people are like, oh, the United States isn't putting the money up, so now Europe is stepping up. That's so shameful. You got to put I'm like, isn't that exactly like what he was trying to do anyways? Was tell Europe that they got to start paying for this stuff? Okay. Anyways, maybe Ukraine falls. And if Ukraine falls, and then, you know, does that lead to World War III or something like that? You know, at that point, I think that Donald Trump ends up looking just as bad as Neville Chamberlain in World War II. So it's kind of funny because I don't think that Neville Chamberlain was actually the naive fool that history makes him out to be. I think that he understood that war with Germany was basically inevitable and that they did not have they were not armed at the time to be able to deal with it. And so he Neville Chamberlain made that deal with the idea of trying to buy more time, which it did. So he was not. It was not quite the way that the history books maybe teach us. Well, it's not even that. I don't even think that the history books necessarily teach us that, but like the popular culture, that's the way that right. They portray Neville Chamberlain as the naive guy that, because he tried to negotiate, ended up creating World War II. Instead of pushing back against Hitler earlier on. Well, no, it turns out that they just really didn't have the ability to push it back against Germany until much later. The whole World War II lenses weren't, well, that's true too. That's true too. But I'm only presenting that as like a what do we you know, I'm trying to represent that argument to its fullest extent to prove the point here that like that's like the worst that could happen, right? If it turned that way, and that's what the pro-Ukraine side is essentially saying, is that you've got to do something about Russia now, or later on it will be World War III when they try and invade Poland or wherever. Yeah, if that happened, then I think that we probably would say that, yeah, Donald Trump's strategy and way of negotiating was not effective in geopolitics. You know? Or the other side that we could look at is the whole tariff thing, right? If the U.S. goes into a recession, I tell you what, man, on the economics side, something that really, really irks me is that nobody has seen the weakness in the markets until Donald Trump was president. Because the numbers that you're seeing, like, and I really saw a lot of it after the jobs number on Friday, you know? After the jobs number on Friday, got a lot of people talking about economic weakness and is it possible that we'll get a recession? Well, so for starters, right now it looks very unlikely that we'll have a recession. But when I say very unlikely, that's like 55-60% chance that we do not have a recession. 45% chance that we do. Okay, so maybe that's not so comfortable. But the numbers that we're getting are just in line with all of the trends that we've been seeing for like the last 6 months. They're in line with the numbers that I've been seeing since I got laid off, because this whole time I've been sitting here being like, I don't know if I can get a job unless the market turns up. And it hasn't been happening. They want to blame it all on Donald Trump, but it seems to me that it's just been a thing that's been ongoing and is kind of a result of like a hangover from Biden policies, right? That is actually kind of more concerning than not, because I think that you might think, oh, so Seth is arguing that things aren't so bad. Donald Trump shouldn't be blamed for anything bad that happens. Well, no, because the issue is if that's the state that we started with, and then you add tariffs on top of that, could that be enough to turn it into like an actual recession? Because under the current trajectory, I think that it's just kind of like a slow slog. Things don't go over until interest rates come back, and then maybe we can be okay and recover, right? But if you add tariffs and these other things have really negative economic impacts, then you actually could get a recession, right? The numbers that were... Okay, wait. Okay, so I'm hearing on the news squawk that Donald Trump is going to meet with Xi as early as April, and we definitely saw some movement in the markets because of that, but I don't get why that doesn't prompt the trade for me, so whatever. I was unemployed in 2008 in finance and still managed. Oh, I don't. You know what? Oh, Ferry is that? I don't know how you say your name. I don't think that that's a good comparison. The hiring rate is lower than it was in 2008. I lived through. That was basically when I was in school. I graduated in 2010. And in those 2 years, I went through multiple jobs, actually. I went through multiple, maybe naive, I went through multiple jobs during that time. It was easier for me to find a job, especially in tech, after the 2008 crisis than it is to find one now. So now probably a better comparison is 2001, like after the NASDAQ crash. The NASDAQ crash is probably the closest comparison for the job market in the tech industry, how bad it is. So I will eventually get a job for sure, but the question is how long is it going to take is the question, right? Well, if it takes longer than 3 more weeks, then I have problems because that's unemployment is 3 more weeks. I guess 2 more because we get this payment. Yeah. Oh, I guess 3 more weeks. Yeah. Yeah. So I don't know, because I see lots of people that like it takes them 2 years to get a new job, and from everything that I understand about it, with the kind of job that I had and everything, that it would tend to take me 9 months to find a new one. So yeah, it sucks. It's pretty bad. And if tariffs and all of that sort of thing were to lead to a larger downturn, then we got a real problem, right? Then Seth has a really bad problem, because then everybody will start to have a problem, but Seth will have had it for longer. Not a very good situation. And I'm kind of sitting here just like, well, I would like to remain detached from it. Generally speaking, tariffs don't work very well. They're not a good thing. I think that, they have a more nuanced argument than that, because a lot of it is like, especially with Canada and Mexico, they still have tariffs on the United States that we don't have on them. So it really is kind of unfair. But is this actually going to solve it? I don't know, man. I don't know. Hopefully Canada and Mexico are able to, work it out. Able to work it out, But meanwhile, I just kind of, all I can do is be like, well, he's gonna do what he's gonna do. We'll see if it works out. Seems kind of high risk to me, but maybe it'll work. Right? But you get what I'm saying? Like, it's high risk. Donald Trump is a risk taker. And he's taking risks with the U.S. economy, essentially. I don't know. I mean, I guess you kind of can afford to take risks with the U.S. economy, because even if it goes bad, it's not the end of the world with the economy. But it sure doesn't help me. Okay, also let's backtrack a little bit. Uzi says, how about that American statecraft in Syria resulting in butchering? Oh man, this is one of the things that like really weirds me out about foreign policy of the last, 20 years? Like really during Obama, is it was like every time that I felt like that would be a really good thing for us to go in and do something about it, we don't do anything. And all the situations where I'm like, I really don't think that we should get involved, we go and we get involved. And Syria is like the perfect example. This is like, I really never understood why Obama got us embroiled over there. The whole situation over there has been bad overall. Like, it's been bad for Europe. The influx of refugees has really harmed Europe, I think, in many respects. Yeah, and I don't think that it's gone very well over there. Like, it's just like complete chaos in Syria now. Japan's trade minister to meet with Lutnick on Monday. So on that note, you think that there's many good new job postings this week? I was a little bit disappointed with last week. Interesting. On the next episode of Strong Source, they're going to be interviewing the Goldman Sachs co-head of Global Commodities Research to ask them about their research and whether we'll really get a commodities supercycle or not, because it hasn't happened. It's been for like 2 years. Coming soon to Seth the Job Search Power Hour stream. How would I do that? You want me to live stream applying to as many jobs as possible? I don't. Low end stuff. Let's gamble on the live stream. You know what? Lately it hasn't been, though. Like on Friday, it didn't help. We kind of gambled on Friday and it didn't work out for us. And that would normally give you a pretty good, like people would show up. But it doesn't happen anymore. I think that the reason it would happen before is because this is maybe a little bit paranoid, but I have seen a couple of things that kind of suggested to me that, like, there was certain people that were obsessed with me and trying to badmouth me and everything. And so when I was having a losing trade, they would go and share the link everywhere to try and, And I think that that's why we got it. And now those people aren't so interested in me anymore. So we just get the same consistent audience that we always do. Like, no matter what we do. What about this one? Oh, that's a new one. I'll have to do that one. Wear a wig and sunglasses and play a character like Mr. Disrespectful. I kind of do feel like I need to do that. It's actually something that's been going through my head a lot. Is like, hey Seth, you need to have like your shtick. You've got to, have this something about your appearance that causes people to remember you. And I just can't imagine what it would be. I kind of feel like that it wouldn't matter if there was something about my style that stood out because I'm still a old white male, bald male, so nobody cares what I have to say. This often feels like that. It would be definitely be more entertaining. Yeah. Well, I don't know, man. I don't know if I'm really in a good spot to judge those sorts of things right now, because I'm just like okay, here's the content that we have planned and we're just going to put that out. And, like, that's all I can do, And, I kind of feel like there's not really anything I could do that would really move the needle and be a game changer for me, I kind of think that there was maybe a time when that could have happened earlier on, and we kind of missed the window. Didn't work out. And not even necessarily anything that we did. It's just didn't happen that way. That's why pretending to give a shit is society's new dick measuring contest. Oh, You can sway 1,000 men by appealing to their prejudices quicker than... Well, I don't know how I would take advantage of that. I really think that we're just going to continue doing what we do, and the channel will continue to grow, but that there's not going to be some game-changing moment or anything. You say no edge today? Says Octavius. I kind of feel like that move to the downside was kind of the opportunity, Like, I think that was a better opportunity than you usually get on Monday. But it wasn't that great of an opportunity, was it? Now it's kind of already done. Want to filter things down to just Utah. They're just not posting a lot of opportunities. Logic states there's always an edge. No, it doesn't. No, I don't think that there. In fact, I kind of think that the nature of edge suggests that the opposite. Like there are real limitations on how you can find an edge as a retail trader, right? And so you need to understand when you can find an edge and when it's not really worth it. Edge wouldn't be edge if it always existed. I mean, there's like, maybe you're the fastest, right? Okay, well that's not a really an available edge for you or me. So you know what though, it's kind of funny. It's just the things that retail traders say to try and get themselves into trades, right? I think so. Retail traders, by and large, trade too much. Mathematics, isn't it? I think that if I had taken a trade today, I maybe would have made money on it, but it wouldn't be very much. I think it was good to sit on it. COT report might be interesting to see if you could do a momentum strategy with COT reports. You see that like the day's over? Yeah, there you go. Well, like usually when we're having a good day though, like there is going to be a trade in the first hour, right? It's been an hour. Yeah, that's true, but that's not practical, right? Like, oh, what I said is true. I think Bullwinkle is just trying to be contradictory because I don't really think that he really has like a real point. Back. If I go fishing and catch no fish, does that mean there weren't any fish in the lake? It could mean that there's not a lot of fish in the lake. I am kind of saying there's not a lot of fish in the lake. like when you look at the hour market in particular, we do not see very many signs at all of any kind of institutional activity. Cumulative delta is just kind of sideways and not doing a whole lot of anything. Spread's not moving. Currency's not really moving. There's not signs of large players executing big meta orders in the market today. And you wouldn't typically expect them to do on Monday. So the best thing for us is to sit on our hands. sit on our hands, wait, and maybe there will be a breaking news story that causes us to move. We did just get a decent drop there. Again, not really very good follow through on cumulative delta or anything. Need to start thinking about more YouTube shorts I can make. Didn't make them on Friday. It was a Friday, but I guess one that I can make is, I should do like this. Write myself a to-do list here. Let's see here. Last week when the market, I do remember that. I can't remember which day that was. But I did explain many possible reasons why it occurs generally. Right? But I do not know that particular day. I don't know. Can we still see? Yeah, it's further back than I have on that chart, at least. Oh, can you answer my question? The best material on how to learn order flow trading, go to my channel page and there's an order flow video series. Morning, Gus. Sure enough, it's shooting right back. So now the market is turning into a, a really slippery one again. May just be trading back and forth based on S&P 500 open, right? Because the S&P is pretty tight so far. Okay, so we can make a TikTok about the news that we got coming up this week. I think we should do one for the jobs numbers too. I think, well, I don't know if I can really make a very good video about this, but I think another thing that's going on is because again, especially on Friday, all the talk, could we actually go into a recession now, really, really picked up. I think one of the big things driving that is that one of the Federal Reserve regional banks, like Nowcast, is showing a negative GDP number. And the reason that it's showing that is that imports increased, and that's likely because people are trying to import things before tariffs go into effect. But you don't want to double count, right? So you should see the companies selling them and all of that, and it should come out. So probably the Nowcast should really be 0.4% or something like that. So the Nowcasts aren't really actually predicting a recession. It's just a misunderstanding of the model. Okay, well, I have a video series which is about order flow, and it's about 6 videos long, and it's the best resource on the internet about order flow, hands down. Kind of noting some weird things about oil this morning. It's like somebody's trying to buy it, but it's getting smacked down. Hmm. So I'm seeing a little bit of an uptick in activity. Yeah, I definitely am. You see it over here if I look at the level 2 changes? How all of a sudden there's just like, we're seeing more activity than we've seen all morning, even though it's in a super tight range. In this situation, that could be a trick. S&P 500 did make a higher swing high. So it's possible that they just break out to the downside in the treasuries. Definitely am seeing about 5,000 contracts net short since this kind of range began. A 931 volume? Yeah. Well, I've been seeing it ever since 920, actually. But they're selling it hard. I mean, like price is dropping, rather. The cumulative delta seems to be a buy. I don't know how much of a buy that is in oil, if that's significant or not. The treasury's still going back and forth at 02, but the 5-year down a tick more than the others. Let's see here. What are you saying, Gus? Using your inventory because, oh, I think that the inventory cost spaces indicator, I think that was just inventory cost basis, is similar behavior can be observed when you go down to take level. Now, this behavior, as far as I noticed, doesn't depend on the buy and long solid lines, but if direction is coming in either way, those lines tend to be bounce lines. So you definitely get hard bounces off of them. Like if there was a trend and the trend ended, and then you're getting mean reversion, and it'll bounce off of one of those two lines basically every time. This morning, because we're in kind of a not a whole lot happening here, kind of like market maker in control kind of market, then what we should expect to see is it bouncing between the two lines or bouncing around one of the lines. And that's basically what we're getting. And see, they did briefly get to the sell side and then came off of it, and then it's just kind of rotating around this. So that is market maker probably injecting some noise into the markets because there's not really anything else going on. That burst in level 2 activity seems to be dying out. Somebody's asking me a question in Discord Ninja Trader channel. Trying to build a volume profile drawing tool, and I'm trying to coax Cursor into helping me, but I can't work out how to access volume at price. And I still use the on-market data event with tick replay enabled to allow me to get volume data at price. Yes. Okay. Let's see here. I have a an old video. Oldest. No, that's not what we want, actually. This one right here. It's a little bit of weakness in the offers there. Okay, it's thickening back up. Huh. You see, so if they tick up again at 05, we'll see. Because I was seeing like 22 and 24 there before. Like, I'm kind of concerned that if they were to trade up there, that there wouldn't be 3,000 contracts at 05 half. Ah, okay. Now you're definitely getting a more extended change in delta in oil to the downside. Yeah, okay. And maybe there is going to be 3,000 there. Okay, okay. 06 being a little flighty, though. Still not really seeing significant changes in it. So, like, there does seem to be volume, but it's pretty even volume. If not slightly biased to the buy side based on our oh, actually this one right here. There you go. Based on the market order imbalance. I think that if the robot were to get a trigger along in here, that it would probably do it by the time it does it. The opportunity would already be passed. Okay. Something's definitely happening in oil. They're pushing even further. Is that the lows of the session? No, they were much lower overnight. Hmm. Shouldn't let myself get too quiet. I'm gonna fall asleep. You're short, yes, but you don't think it will work out? I don't know. It's been going pretty good. If you had gotten in that, like, 5,700, 5,710, I think you'd be pretty happy with the short, right? It's a good 20 points. Okay, treasuries came back to the open. Still not really seeing any clear trend in cumulative delta in the 10-year. I think daylight savings got me all messed up. Okay, let's read this guy. Maybe he's got something. Trading the past versus trading the future. The real difference between retail traders and big players. If you think the difference between a retail trader and an institutional trader is just a matter of capital, you're looking in the wrong direction. Yes, big players move amounts of money that a retail trader will never see, but the real gap isn't about money. It's about how they approach the market. Trading isn't about reacting. It's about anticipating. The mindset shift alone separates retail traders from the institutions that move the market. Well, I definitely feel that that's true. We're trying to make predictions about future order flows. And what I see most retail traders doing is waiting for some pattern to show up on the thing and then reacting to that pattern. Is that a shorts that Uzi just posted there in chat? I've never seen that before. It looks like shorts with like mountains on them or something. And many retail traders believe trading is about analyzing charts, applying a few indicators, and waiting for the perfect setup. Some even go further, studying market depth and order flow, but true professionals base their decisions on what actually moves the market, not on what actually already happened. Yeah. See, all of the order flow stuff is kind of useless if you're not looking at things that's actually going to predict that, right? Like, I'm watching it here in the market so that I understand how the order flow behaves, so that when I do have something, when I am actually anticipating something, a certain flow coming into the market, I know what it will look like. But the edge is truly the thing that I'm anticipating, the flow that I'm anticipating. Yeah. Every indicator, every setup, every signal on a chart is simply an interpretation of past data. It doesn't matter if it happened an hour ago or a second ago. It's history. Institutional traders don't rely on indicators because markets aren't driven by an oscillator crossing a line or a candlestick forming a pattern. Indicators don't predict anything. They narrate what already occurred. Ever seen an RSI divergence fail miserably? It's because orders move markets, not indicators. Indicators provide context, but if your decisions are based solely on them, you'll always be chasing the market. I really like what this guy is saying so far. He sounds like a follower. I don't know. He says orders moves markets. That's like a key green flag, right? Institutional traders don't focus on the past, they focus on where liquidity is headed. That's why they closely watch market depth, the DOM, options flow, and genuine drivers behind price movements. The DOM shows passive orders and liquidity distribution, hinting at future price direction. Options activity is among the most revealing tools, showing where big players position themselves and where gamma barriers might accelerate or stall prices. Even macroeconomic news isn't gambling. The real impact of news isn't just about the release number. It's about how the market was positioned beforehand. Think about the latest CPI or non-farms payroll release. Institutions didn't just react, they positioned ahead of the event. Many retail traders mistakenly think the order book empties because of aggressive market orders hitting after the news. In reality, institutions strategically remove passive orders ahead of news, reducing liquidity and amplifying volatility once aggressive orders enter. I don't know why he's talking about that, but okay. Understanding these liquidity dynamics provides an edge no indicator will. A retail trader relying only on charts will always chase the market. Those who study what actually moves price can anticipate and clearly see where big players are positioning. Stop trading based on what the charts show you. Start focusing on why the chart is showing you what you see. There you go. Have you ever traded by looking ahead rather than behind? What could happen if you did? It got 9 upvotes. It was better than any post that I've made like that. I actually said this to you last non-farms, but volatile news is more exit activity than entering. So you think that the market orders that hit the market immediately after the news are people exiting positions? Could be. I guess that we would really have no way to know for sure. But I think he's kind of saying that they pull the liquidity to make it easier for it to move on. I'm not so sure if that's exactly why it happens, but yeah, people are bailing because their predictions are wrong. Sometimes, maybe, yeah. They're stepping up to the high. But I don't understand why he would decide to bring that up in that spot in the post. Kind of seems like a strange segue. Not relevant to the central point. Here's somebody countering. So, sure. So, where those pump and dumps come from? Childless emotional garbage as always in this one. Water is down. I don't know. TweetDeck seems to be working for me. I'm going to try refreshing and see if that changes anything. Refresh seems to work too. Down for you. Yeah, I guess. I'm curious as to why. I've made posts like that before, didn't do well, and I'm curious to see that this one. Well, we should come and look at this guy. Trade Phantom. That sounds familiar. AI powered market intelligence system. Oh, okay. He's selling a service. Get AI insights now. Pricing. Retail $197.99 a month? Wait, is that a month? It doesn't say if it's a month. Get 2 AI powered trading plans per day tailored to your preferred market assets for $197. That seems a little steep to me. Oh, and look, he went and reposted it everywhere too. Spammer. Think he'll get banned? Let's see here. So touching, just want to note that 07 was like that opening. Yeah, opening range. So we're just at it. Oslo should note Bitcoin kind of heading south. It does look like, you know, after things looking kind of like maybe they were going to resolve to the upside, the S&P 500 seems to have moved more decisively lower, and that seems to be why the treasuries are kind of bidding up. So that is interesting in that usually when we're getting like a flight to safety bid, You will see decent volume coming into it, but you're not in this situation, which says to me that the market makers seem to be factoring in the S&P 500 into their price more than they were in the past. So that is a very interesting change in the market. You got long at 5.5. Oh, that's not bad. I have to say I'm not incredibly enthused about how they're behaving around this high. Like, they didn't just plow through it to an extent, right? Like, they're playing with it a lot. So that still kind of leaves me in the, I don't know if I really want to touch it. I think that, like, there's a large sell meta order over in the S&P 500, and so we can buy it over here in the treasuries, even though we're not necessarily seeing the cumulative delta. I think that that's a reasonable trade, but I don't know. I'm not never confident about what I think the S&P 500 is going to do. So. Okay. Yeah, they're still kind of playing with it, right? Let's read this. Is Trump trying to push the U.S. into a recession? I don't think that he's trying to push it into a recession, but I do think that there may be some points at which he thinks that there's some room in the economy for him to work with, and that he will do things that are objectively bad for the economy. But I don't think that he would want to do it so much so that it goes into a recession. if it does break out here, I'm probably going to be paying attention to something else and miss it. But they're still toying with it over there. Okay, let's read this. 1 month ago, when we first realized just how much that Elon Musk's Doge was slashing from the government money laundering apparatus, we made a controversial at the time observation that so much deep state laundered money was about to come out of the economy that the U.S. would enter a recession. First in Washington, D.C., something which Michael Harnett and others have since confirmed, and then across the United States. If you cut enough spending, even if it's all grift and fraud, you eventually get a recession guaranteed. That's all Congress is waiting for, because they use the emergency to vote through a what was this? To vote through a far greater spending package, one which eclipses all of Doge's spending cuts. No, I don't think so. I doubt he has the forward thing. Well, but he has a really good economic team. That's the thing. I think that they are doing this. I think that his economic team are basically saying, like, we need to push the economy in this direction, but doing so kind of harms the existing economy. So how do you find a path towards that transition? Well, start with an economy that's fairly strong. You know, when it's strong, do the things that aren't necessarily super positives in the short term, right? And you just kind of have to draw it out so that it never reaches the breaking point. So if it does start to get to that breaking point, I would expect them to take their foot off the gas pedal, essentially. Or their foot off the brake, I guess. So they're putting on brakes, right? Take your foot off the brake, let it kind of normalize a little bit, and then maybe you do a little bit more. What's the benefit of doing so? Because they want to remake the economy into one that has more manufacturing, essentially. Scratched it. it would take 10 plus years to implement that. I think it probably would take longer than the 4 years that they have, at least. Probably. It's as if they're unaware that we don't have a plethora of idle manufacturing facilities. Well, they'd have to rebuild a lot of stuff, right? But I mean, that's exactly why they think that it's so important that they start now. Because, like, in all seriousness, if we had an open armed conflict against China, that would kind of be a problem, wouldn't it? Because so much of our manufacturing capacity has been pushed overseas to China. If all of a sudden we didn't have any of that stuff, we would be screwed, and it would take a long time to get it back. Or like if China invaded Taiwan, and my understanding is that the big machines that they have in Taiwan that are so valuable would get destroyed in that case. And that would be a disruption that would set back the entire semiconductor industry for several years. That's why they made this change and they started making them in Arizona. I mean, it's a larger thing. I think that it's going to happen to some degree anyways. Like it's the slow march of globalism is receding. And it's kind of funny because it was like, that's the way that Donald Trump was pushing during his first term. And then like towards the end of his first term, because of COVID, then all of a sudden the whole world kind of said, actually, you know what? We do need to go this direction. Not because of anything Donald Trump did, but just that COVID and all of the supply chain issues and everything kind of made them aware of the risks and with the system that they have. And they said, oh, we can't rely on these supply chains exclusively, because in a risk situation, those aren't going to be available. So we do have to have some degree of self-reliance. And that means there's lots of manufacturing infrastructure that the US will have to completely rebuild. Yes.
Block by.
Ah, there it is. They did that one pretty aggressively, didn't they? 5K into 08 half? Let's see, it was 2K into 8, and then 3,500 into 8 half. Tick back down. Okay, so this is now a testy situation. And in this context, I don't think that I can really predict what's going to happen. But it's definitely a situation that's going to perk our interest and is going to perk the market's interest, and will probably go one way or the other. There was an iceberg at 09. Big market orders hit it. Are there more big market orders out there waiting? Or was that it, and that iceberg is going to hold and we're going to get pushed back down? Americans want low prices, period, and they aren't going to get the lowest prices they're probably not going to get lower prices manufacturing here. That's true, too. But that's why you're going to force it with tariffs, right? That's why they have to have the tariffs. Like I said, it is going to happen to some extent, one way or another. maybe to not to the degree that Donald Trump wants, but if somebody else suddenly became president, I think that you would still kind of have this slow shift to bringing some of that back home. You saw that under Biden with them moving a lot of chip manufacturing back to the United States. Back to 07. That doesn't mean that we're not going to make another new high, but if you had taken that, like bought on that, thinking, okay, now they're busting the highs and they're going to go right, you'd be awfully disappointed. And that's exactly a sort of situation where I can remember in the earlier days when I was kind of taking that as a signal, and I would find myself disappointed like that many, many times. I'm having like real serious flashbacks right now. Oh yeah, so we're reading a story on Zero Hedge. We should go back to this, all right? We were surprised at how much pushback we got, especially from supporters of Trump, but this wasn't meant to be a judgment call against the new administration, which had only been in power a few weeks. If anything, we had explained long ago that the only reason the U.S. economy hadn't collapsed into recession long ago is because of Biden's unprecedented debt issuance spree, which we first described in the summer of 2003, and which had sent U.S. debt soaring by $1 trillion every 100 days. But now that particular debt party scene appears to be ending. Yeah, so I don't know if it was like a recession or anything, but the Biden administration was definitely pumping some money into the market. And like I said, I kind of seems to me like we're kind of suffering a hangover from it now. Basically, they really spent a lot of money trying to keep the market afloat, instead of just letting it come down to where it needed to go naturally so that we could normalize interest rates. So would interest rates be lower today if the Biden administration had not increased government spending so much? I think yes. Then we'd probably be in a better spot. Understandably, diffusing this debt time bomb is precisely what Elon Musk has undertaken, and the process of undoing all the catastrophic trends that culminated under the Biden administration would inevitably result in a recession. Just allowing the debt pile to continue its record melt-up was the only thing that delayed the inevitable economic slowdown. Still, our observation came at a time when U.S. exceptionalism trade was still at the rage, if only for a few more days, and thus few were willing to accept it. Then little by little sentiment turned, and just a few weeks later, Wall Street was full of reports such as this one from Mizuho's Dominic Constam discovering what we had said weeks earlier, namely that the efforts of Doge, and why do I never say Doge correctly the first time? Doge would spark a new recession, first in the government and then everywhere else. Blah, 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 blah. So slowly but surely, Wall Street admitted we were right, but what about the administration? Would Trump be surprised to learn that Musk's austerity push, plus the administration's tariff policies, would lead to a recession? We wondered, and then we start paying closer attention to what Trump and his closest lieutenants were saying. First, there was Trump's Treasury Secretary Scott Bessent, who correctly explained last week on Face the Nation how the media was misleading people that the economy was doing just great under Biden, and how the mood suddenly changed when Trump came into power. His point, of course, is that Trump has not been nowhere long enough in power to slam the economy himself. That's true. Some days later, Bessent also explained why the economy had been doing so great during Biden's last years. He basically echoed what we said 2 years ago in the Here's a $1 trillion stealth stimulus behind Bidenomics, in which we explained that the only reason the U.S. economy hadn't collapsed is because the government was issuing $100 trillion in debt every 100 days, or as Bessent put it, the market and the economy have become hooked, become addicted to excessive government spending, and there's going to be a detox period. Yes. You're laughing at me saying Dougie. I really think that the person, you know what? When I first saw that post on Reddit, came from a Reddit post, I thought for sure that he must mean it trying to say like Dougie, but then he posted something like the guy that originally posted that comment said that that's not what he was thinking. So the Trump administration has just turned the insane Biden-era CBP One cell phone app into a self-deportation app called CBP Home that drops today. That's funny. Okay. Back up there again in the treasuries. They might make another push. Let's see. Okay. That also explains why, to avoid a technical recession, Trump's Commerce Secretary Howard Lutnick told Fox News the Trump administration was considering separating government spending from GDP reports. Oh yes, I read about that. In response to questions first posed here about whether the spending cuts pushed by Elon Musk's Doge could possibly cause an economic downturn, you know that governments historically have messed with GDP, Lutnick says on Fox News Channel Sunday Morning Futures. They count government spending as part of GDP, so I'm going to separate these two and make it transparent. Okay. I mean, if you separate the two of them, that's cool. As long as I can still combine the two of them together and create the same metric, right? Okay. Lutnick's remarks echoed Musk's arguments on X that government spending doesn't create value for the economy. A more accurate measure of GDP would exclude government spending, Musk wrote on X. Otherwise, you can scale GDP artificially high by spending money on things that don't make people's lives better. Well, but, I mean, I don't think that that's what GDP is supposed to measure. But okay. Lutnick's take was a bit more nuanced, but leaned in the same direction, saying if the government buys a tank, that's GDP. But paying 1,000 people to think about buying a tank is not GDP. That is wasted inefficiency, wasted money, and cutting that while it shows in GDP, we're going to get rid of that. Like, the issue that you got here is, you think, yeah. So this all comes down into this thing that's like when a particular metric becomes a target, that metric tends to become useful or unuseful. That because people game the metric. Should I try that again? When a metric becomes a target, that metric tends to become less useful because people will game the metric. And that's what the government has been doing, is we've made GDP like the key measure of like how well the economy is doing. And so the Trump administration's strategy is to change the metric. And the problem with that is that there's a reason why that metric was like the top metric to look at that sort of a thing. And people are probably still going to look at the two of them combined. And I don't know if they will care as much about your new metric without the government GDP involved in it. People might not care about that one just because you want them to, right? Okay. Then there was Trump himself, who, during his speech to Congress, issued the most explicit warning yet, saying to expect a little disturbance on tariffs, echoing what he said in February when the president posted in all caps on his Truth Social account that this will be the golden age of America. Will there be some pain? Yes, maybe, and maybe not, adding, we will make America great again, and it will all be worth the price that must be paid. But the clearest indication that Trump is now eager to push the U.S. economy into a recession, one which he can correctly blame on Biden's drunken sailor spending ways, and that the Trump cut is now a call, came from President himself when, in another interview over the weekend with Maria Bartiromo, the president was oddly defensive and saying, I hate to predict things like that, when asked if he expected a recession this week. There's a period of transition because what we are doing is big. See, there you go. I can tell you, I know what I'm talking about. They want to transition the economy. Yes. But that is a big thing, and there are always periods of it takes a little time. It takes a little time, but I think should be great for us. I mean, I think it should be great. So he's got to be careful what he says, because if he says, I think we are going to go into a recession, then the markets will be like, oh, well, it's going to happen, right? That affects confidence. And I think that that's one of the issues that I see right now is that I don't think that given the current, even with like tariffs and all that sort of stuff, that we would see some weaker growth, but probably not a recession. But you don't have much room left after that. And if all of these decisions really negatively impact consumer sentiment to the point that even the Republicans are seeing negative consumer sentiment, then yeah, that could easily turn into a recession. Okay. As for stocks, don't expect Trump to jump in and seek a bailout. There could be a little disruption. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We go by quarters. What we're doing is building a foundation for the future. Yes. Good, good. And if that wasn't clear enough, his Treasury Secretary, Scott Bessent, was about as explicit as possible, predicting that the U.S. is headed for a, quote, detox period, and warning, could we be seeing that this economy that we inherited start to roll a bit? Sure. He also ruled out policy shifts to prop up the market, confirming that, at least for now, Trump is dead and buried. Commenting on these pre-recessionary sound bites, Goldman head of Delta One Trading, Rich Revdotsky, said, well, commendable to attempt to address the long-term imbalances of debt sustainability and spending. It's hard to see how these won't have short-term economic implications, effectively echoing what we said a month ago. Rabobank was even more explicit when he said that Trump hasn't mentioned stocks so far, and the word from DC is their focus is on Main Street, not Wall Street, with willingness to tolerate disturbance at least for the next 6 to 8 months, while blaming it on Biden in order to get a framework in place that allows for growth based on what Trump thinks GDP is for. But it was perhaps no mere as Charlie McElligott who laid it out best, saying the U.S. is now undergoing a clear phase shift, one which will be very painful. Don't just take my word for it. They're telling you the playbook, and the phase shift will be a painful part as we engineer a recession. See, I really don't think that it's meant to be a recession, but I do think that they expect pain from these policies. Oh, we did make a new high. I didn't even notice. Yeah, it was kind of a little bit uneventful that time, though. Okay. Treasury Secretary Scott Bessent at the New York Economic Yacht yesterday. Oh, New York Economic Club yesterday, going even harder on the public to private and Wall Street to Main Street U.S. growth and wealth inequality reset themes, among other high-quality insights into everything from sanctions to the role of banks and regulations, but that's for another time. POTUS has begun an aggressive campaign to rebalance the international economic system. Access to cheap goods is not the essence of the American dream. The American dream is rooted in the concept that any citizen can achieve prosperity, upward mobility, and economic security. For too long, the designers of multilateral trade deals have lost sight of this. Inflation risks are not just a priority or are overstated once we hit you with the growth drag, is what Zero Hedge has in the right. This is what I've been warning against the whole time, right? The tariffs aren't necessarily strictly inflationary if it leads to decreased economic activity. It can actually be deflationary. And the big one on the reset from growth dependency upon government deficit spending and refocusing into private sector stimulation, taxes, and deregulation. The first time I went to see President Trump, he looked at me and he said, how do we get this debt and deficit down without killing the economy? I've been thinking about this for 18 months, and the way to do it is the transition from public sector to private sector. 25% of GDP goes through Washington. And to further signal intent from Bessent on this one on CNBC, like, can we make this any clearer, people? Bessent, we could see inherited economies starting to roll a bit. There's going to be a detox period. There's no Trump put, but there's a Trump call upside. The issue is this: when running this government fiscal contraction and Doge attack on awful spending, which has been conditioned into both parties for decades in order to reduce government expenditures meaningfully, think overflow over stock, change or impulse, not absolute levels, but At the same time, that global trade rebalancing means tariff wars with your largest trading partners. There is simply no way to maintain current real GDP growth, let alone move it higher in the near term. It's going lower, and that's the point. They understand this phase shift means pain, and with intent to do it fast and early into his term, because you need to remove the sources of excess economic stimulation through fiscal contraction, and then simultaneously will act to drain real economic demand via negative wealth effect as markets acknowledge the lower growth implications. This intentional growth drag and negative wealth effect, the engineering a recession thesis, will act as a disinflationary impulse, which then facilitates the shift into phase two, which is where, thanks to the disinflation, you can then finally act to stimulate the private sector through easier monetary policy via Fed cuts to reduce the cost of money, and then further escalate into tax cuts and mass deregulation. Yet, as there will be the case in our debt adults, there's a lot of spelling errors in this, sorry. Enabled by both the perpetual deficit spending politicians and central bankers who cross the precipice into moral hazard zone of the QE trap, we societally have an extremely low tolerance for pain. That's true too. So can the voting public, politicians, and central bankers write out the consequences of this well-intended rebalancing act, or will the tantrums for more overwhelm and force a bending of the knee back to the unsustainable status quo government deficit spending economic dependency? It will come down to the speed by which the Trump administration's international controlled demolition double whammy, growth drag and negative wealth effect, can lead to disinflationary impulse, which allows for the easing thereafter. Otherwise, it seems market forces are happy to find the clearing lever on the Trump put, which remains still deeper out of the money and equities. So I think that there's a thing about like degree here that they're getting wrong, right? Because they think we're going to engineer a recession. I think that Donald Trump wants to avoid a recession, but they do expect there to be some short-term economic pain from a transition period. Okay, well, and what is the part of the point of this transition period is to get interest rates lower so that they can stimulate the private sector and bring things back up. They want to take money out of government and into the private sector. That's what they're trying to do. Okay. Well, but let's just think about interest rates for a second, right? They're probably not going to cut interest rates next week. It's next week, right? It's definitely next week. Yep. FOMC March 19th. Next Wednesday. They're not going to cut interest rates then, but the market has been kind of pricing that maybe they could do it in May or June. And then you would only want it to be like one rate cut, you know. So like the market pricing in 3 rate cuts this year, that seems reasonable, and you don't necessarily want it to be less than that, right? So I don't think that Trump needs to like really push, you know, like if they want to get the rate cuts, they don't really have to do a whole lot, right? Or anything more than what they've already done, right? So I do kind of think that there is a put, actually. I think that if like tariffs with Canada and Mexico start causing enough problems that they would cut a deal to save the economy, for instance. That's what I think. Let's finish reading this. How much? Almost done. Putting it all together, the emerging picture is clear. What we said a month ago was spot on, and while perhaps not actively pushing the U.S. into a recession, Trump and Bissent certainly would welcome it, especially with the midterm elections fast approaching, knowing they still have the benefit of a few months in which to blame the Biden regime and its staggering debt incurrence, which we first explained had kept the economy afloat for so long. And once the economy and markets have had their reset, most likely with the benefit of another huge fiscal stimulus from Congress, which will have no choice but to step in once there is a recession, The economy and markets will levitate straight into the November 2026 midterms, which cements the Republican grip on power even more, even if it means some rather acute pain in the immediate future. You really think that if we had a recession that there would need to be significant monetary stimulus from Congress? Because I kind of don't think so. Maybe you expand unemployment benefits, but other than that, I don't think that you'd have to do much. The monetary policy should take care of it, unless there's like industries collapsing that need to be bailed out. Okay. So Trump went from boasting he'd lower prices on day one while campaigning to now expect disturbances. Yeah. Well, but, I think that the whole, like, he's going to reduce prices from day one is kind of an autistic take on what he said, right? Like, we have to take into account the context in what he's saying it and what people understand about inflation and things, right? Because most people don't understand that inflation is kind of more of a growth rate, right? It's the change, it's the rate of change in prices and not the absolute level of the prices. So when we say I'm going to reduce inflation on day one, that doesn't mean that prices are going to go back down, right? Trump kind of understands that, but he also kind of understands that the constituents don't understand that. So he's playing on that misunderstanding, right? And then, of course, everybody, pretends that they're autistic about it. Oh, he said he was going to bring down prices day one. Hey, he's a politician. Come on. But I'm really not that concerned about inflation right now. I tell you what, if we saw a real increase in inflation over the next 6 months, that would really put a significant wrench in everybody's plans, wouldn't it? Yeah. That would be a big problem. Maybe then they did. Maybe then they would, quote unquote, engineer a recession. But so from that perspective, the short-term trade is sell equities and buy treasuries. Yes. But to what degree is the real question, right? How far will the S&P 500 get? Well, we're not even to a 10% decline yet, so wouldn't worry about it too much. On the other hand, if we go back all the way to 2023, could we get a 30% decline? I think that's like the story that Zero Hedge is saying, that it's like all of this money is going to come back out and all of Biden's growth is going to have to come back. And we're going to have a recession. Then 30% or more kind of makes sense. But I'm just not convinced that we're going to go that far. Certainly would take a long time to get down there if we do. Not going to happen tomorrow, right? You know, the Treasury's still being a little bit flaky here, even though they did push higher and you got a pretty good looking trend in the end. See this? Good trend lines. Cumulative delta. Just kind of sideways. Really only buying like right here. So that looks to me like a move up that is probably based more on, let me come back out here, correlation with the S&P 500. So if I turn on my little, you know, global no time scroll here, we can see that through this whole move, the S&P 500 has slowly been turning down, which is maybe explains why the range of this is so big, because that's kind of unusual for the treasuries, right? It's because it's the correlation, or at least my theory is that it's the correlation between the S&P 500 and the treasuries. So it's kind of curious that the market makers are factoring in the correlation, but you're not seeing it directly over here. In other words, money is coming out of the S&P 500. The price of bonds is coming up, but the money is not actually going into bonds. We can't really see it, but perhaps it is going into the Japanese yen. That doesn't sound like a good thing, does it? I don't know if it matters, but it seems like that could maybe be a bad thing, yeah? We'll see.
Block buy.
Ooh, there you go. Oh, that was a big one at 10.5, 4K into 10.5. Maybe they were just being sneaky about it. Well, I'm interested that I'm not seeing a change in the yield curve with all of this, but I wonder, because like if you were to buy it, like let's just say that we were expecting a trend day. I'm not, but let's say we're gonna get it. I think it probably likely continues this like really far back and forth. So I don't think that you want to buy it there at 11.5, do you? You probably want to wait for it to come back out. But that was such a strong impulse. They're holding the bid. That might just go. I'm surprised that my algo never got a signal. Never got a signal. Want to change it back to 55 instead of 60? Or maybe we could do a halfway. Maybe we could say like 57. 57.5. Relationship question. If you lost your spouse in the Thanos snap, but 5 years later the Avengers brought them back, but you already are remarried with 3 kids and spent the life insurance on a failed food truck, do you get back with your old spouse or do you stay with your new Thanos snap family? Oh, I hope that never happens. I think we all know that life insurance companies would not be paying out for Thanos snap victims. Oh my gosh. This is going. You know, I think I underestimated the sentiment today. Because I did kind of think that, oh, okay, well, overnight they're selling. We'll see, maybe they'll sell it a little bit more. But I was kind of expecting it to be like early sell and then quick bounce. But no bounce in the S&P. So I guess a trend day is not outside of the question. But I definitely wasn't expecting this strong of a float. That last move right there, the cumulative delta really caught up. That was like an 8K change in cumulative delta all at once. What type of food is there in the food truck? Well, I don't think that the food truck would matter as to whether or not you stay with Thanos Snap family or not. It's impressive to rack up 3 new children in only 5 years. Yeah, triplets. There you go. I think that if my wife was Thanos snapped, that it would be very difficult for me to get me remarried. I don't think that I would really put a lot of effort into it. Somebody would have to like really, really come and try and drag me into it. I wonder, do we have like an upside limit? Well, we really don't. So that's really interesting. I think that the sorts of things that I would typically look at to try and determine, like, how far could we get today? I don't know if they're really helpful here. We are above Friday's high at 11.5, and then Wednesday's high was 15. 15 and 16 doesn't seem that far away or unreasonable, given the aggressiveness with which some of these moves have. Izzy says 14.5. Okay, sure. Are there any moving averages that might matter here? Oh, okay. 12 is the 200-day moving average. But that kind of suggests to me that there could be even more flow coming behind this. Well, it's time for me to get going, so I'm not going to take a trade on it or anything, but... And my new squawk just noting that we fell 10 basis points. I guess we'll just see what happens. But I'm going to record some TikToks. I'm going to try and record a video. So I think I have some work to do. I am going to get going. Apal says good game. Interesting day, right? I mean, I don't know. I don't think I predicted the flow this time. But it is a Monday. That was probably the big thing holding me back. So I don't know if it's huge still. But it makes me interested in what the rest of the week is going to be like. So I'll see you guys tomorrow. Stay excellent, team.